Hello everyone, welcome back to Basic Course Part 2. In this course, we are going to discuss about technical indicators. See, technical indicators plays a very vital role in trading because they'll give you buy or sell signals, right? So, in this course, we are going to discuss these many important technical indicators such as pivot points and CPR, moving average, relative strength index, and moving average convergence divergence, which is popularly known as MACD, right? So we will see one by one. First, let us understand pivot points and CPR. Pivot point is a leading indicator. See, in trading there are two types of indicators, leading indicators and lagging indicators. Leading indicators are the one which will give you buy or sell signal well in advance so that you can take buy or sell decision at right time, right? So pivot points are one such indicator, they'll give signals well in advance. Whereas lagging indicators are the one which will give delayed signals. Your moving average, stochastic, those are all considered as lagging indicators. And pivot points are nothing but support and resistance levels on your chart. And pivot points are purely derived from prices, which are nothing but support and resistance levels on your chart. What is this support and resistance level? So support and resistance levels are price levels which will not let the prices to go beyond such level for a particular period of time. That is known as support and resistance level. And support and resistance level which will give you buy or sell signal to the trader. So let us understand how. Let me draw a chart. This is your chart, and market opens somewhere around here and it keeps moving like this, right? Based on this we can draw support and resistance level. This is your resistance level and this is your support level. See, stock is moving like this, it opens somewhere around here and moving like this. When it comes near this level, here there is a resistance, right? Sellers become strong, they'll push down the market. Again, when it comes near this level, buyers become strong and they'll push the market up. It's keep going up. When it comes near this level, it has taken reverse because here sellers become strong. Resistance means sellers and support means buyers, right? So how to take trade based on support and resistance level? So when price is near the resistance level, it will give you sell signal, right? You have to take short trade. Short trade means sell. And where you should book your profit? When it comes near the support level, this is where you should book your profit. Suppose you have taken trade at support level, so support level gives you buy signal. Suppose you have taken trade here, where you should book your profit? You should book your profit at resistance level, right? Here sellers become strong and they'll push down the market, right? So this is what support and resistance level. So pivot points are nothing but support and resistance levels on your chart. See, if you go to trading platform and plot a pivot points, you will see some horizontal lines like this. So these horizontal lines are known as pivot points, right? So these will work as a support and resistance levels, right? Okay, so this pink colored one is known as central pivot and lines above the central pivots are known as resistance level, R1 pivot, R2 pivot and R3 pivot, and the lines below the central pivots are known as support levels, S1, S2 and S3. So, and most of the time, majority of the time, market moves between R2 pivots to S2 pivot. It moves within this range only, more, and very rarely it can break R3 R4 if there is a good news or something in the market, some good news in the market, it will break R3 R4, and if there is a very bad news in the market about the stock in the market, so obviously it will break S3 S4 like that. But most of the time the price move in this range only, S2 to R2, right? And So as I already mentioned, these are all important levels, support and resistance levels for your trade, right? So this will work as a boundaries for your trade. See, for example, market opens at R1 pivot and it keeps going up like this. When it comes near the R2 level, here either it can break this level or it can take reverse. Let's assume it has taken reverse. This work as a resistance. It has taken reverse and it keeps coming like this. And when it comes near this level, it work as a support, right? And it keeps going up like this. When it comes near this level, it breaks this level and keeps going up like this. Earlier it was a resistance, right? And this time breakout has happened and it keeps going up like this. When it goes near this level, it has taken reverse, and when it comes near this level, see, here this level work as a support. Most of the time this level work as a support. This is the fundamental principle of support and resistance. That is, resistance level, once it is broken, next time it is likely to work as a support, right? So again it is keeps going up like this and took resistance at this level, and this time it breaks this level and keeps coming down and took support at this level and keeps going up, right? So earlier it was the same level was a support, breakout has happened, and next time, most of the time, the same level will work as a resistance. This is the fundamental principle of support and resistance. Resistance means sellers, support means buyers, right? Buyers, they'll take the market up, and sellers, they'll take down the market, right? And pivot points are nothing but they will work as a support and resistance levels on your chart, right? So this is what pivot points. Next, central pivot range, that is CPR, right? So CPR is nothing but, here you can see pink line, this is central pivot. One line above the central pivot and one line below the central pivot form a range. That range is known as central pivot range, and this will work as a strong support and resistance for your trade. So the line above the central pivot is known as top CPR, and the line below the central pivot is known as bottom CPR, right? So the top CPR and bottom CPR will make a range. So that range is known as central pivot range, right? So this central pivot range work as a strong support and resistance for your trade. Now let's see various types of central pivot range. So first, wide central pivot range. Wide central pivot range is nothing but when there is a huge gap between top CPR and bottom CPR. That is, when you see a huge gap between top central pivot range and bottom central pivot range, then it is known as a wide central pivot range, wide CPR, right? So when you see this particular CPR on your chart, it represents a strong support and resistance. How? Okay, let me explain that with an example. Market opens at R1 pivot. Assume market opens at R1 pivot and it keeps coming down like this, right? By looking bearishness in the stock, what you will do? You will take a short trade, right? You will sell here, and you keep your stop loss above this level, right? And it is keep coming down like this. In this situation, where you will book your profit? So what you may think of booking your profit somewhere around here. It is looking very bearish, it may go down like this. No, whenever you see a wide CPR on your chart, suppose you have taken short trade here, when price comes near the CPR, this is where you should book your profit, because most of the time, because wide CPR work as a strong support and resistance, so it will most of the time price take reverse and it may hit your stop loss also. So don't lose your profit what you have earned from here till here, right? So that's the reason whenever you see white CPR on your chart, when price comes near the CPR, that is where you should book your profit, you should square up, your position, right? Similarly, suppose market opens at S2 pivot and it keeps going up like this, looking bullishness in the market, what you will do, you will take a long trade and you keep your place your stop loss below this level, right? Long trade means buy, and it is going up like this. Where you should book your profit? Obviously you should book your profit when price comes near the CPR. This is where, right? Most of the time it will take reverse. See, CPR means it can be bottom CPR, central pivot, or top CPR. So it can take reverse from year or year. But uh, my suggestion is you just book your profit at bottom CPR only. Suppose you have taken long trade, because so it can take reverse anywhere, from bottom CPR or top CPR or central pivot. So that's the reason, be a safe trader. So you just book your profit here, otherwise it will take reverse and it may hit your stop loss, right? So this one thing you should remember when you see white CPR on your chart. And one more thing, when there is a white CPR, the whatever criteria that I'm telling you, it is mostly applicable, more than 90% it is applicable to Bank Nifty, right? For equity also it is applicable. Bank Nifty, it applies very much, right? And whenever you see white CPR on your chart, it is most of the time market stays sideways, right? It is in a range bound. There is no trending day. What is trending day? Usually it will never move like this or like this. Most of the time, majority of the time, it stays sideways. So those are the criteria that you can keep in mind when you see white CPR on your chart. And next category, that is narrow CPR. Narrow CPR, when there is very less gap between, very small gap between top central pivot range and bottom central pivot range, then we can consider that as a narrow CPR, narrow central pivot range. And when you see narrow CPR on your chart, it is not a strong support or resistance. So most of the time price may not respect this CPR. Suppose market opens somewhere around here and suppose you have taken long trade, so you need not to book your profit here, because it may not respect this narrow CPR. It can easily break the CPR and go up like this or go down like this, right? So it is not a strong support and resistance. And one more criteria that you need to consider when you see narrow CPR on your chart, most of the time it is a trending day. It is not a range bound day or sideways. Market may not stay sideways. Most of the time when you see narrow CPR on your chart, it is a trending day, upward or downward movement you can see, right? More volatility you can see when you see narrow CPR on your chart. See, this is Nifty spot chart. On 23rd, see, you can see a narrow CPR. There is a less gap between top CPR and bottom CPR, and market opens somewhere around here. It keeps going. There is an uptrend, trending day, right? And here there is a wide CPR that you can see, right? And it stays sideways. And one more thing, so here market opens here, R1 pivot, and it keeps coming down. And when it comes near this CPR, top CPR only, it has taken reverse. That is why, suppose you have taken short trade here, where you should book your profit? This is where you should book your profit, right? So this is how you need to take trade when you see narrow CPR or wide CPR on your chart. Here, see, here there is a narrow CPR and the price breaks this level easily and keeps coming down, and it's a trending day. And here there is a wide CPR, market stays sideways, right? Okay. So before going to one more category, that is virgin central pivot range, we'll see on chart. Here you can see a narrow CPR on 26th November. Narrow CPR, trending day, right? And next day there is a wide CPR, right? So market stays sideways, and suppose you have taken long trade here, when price comes near the CPR, this is where you should book your profit, right? This is where you should book your profit, right? So, and narrow CPR, it breaks easily. So this is live chart I'm showing. Narrow CPR, it breaks easily. Price breaks the CPR easily. Bank Nifty chart, and wide CPR stays sideways, right? Somewhat wide. It is like average CPR, and narrow CPR again on 3rd December. See, price breaks this CPR easily and coming down, and wide CPR. You can see wide CPR here. Suppose you have taken long trade, you have to book your profit when price comes near the CPR. That is what? Price support this CPR when there is a wide CPR, right? So here somewhat wide CPR, but there is a trending day. But some good news or bad news in the market. Very rarely it is a trending day when there is a wide CPR. But see here, you can most of the time when there is a wide CPR, market stays sideways, and narrow CPR, it breaks the CPR easily, and here very narrow CPR, trending day, right? That is how you can analyze. See here very narrow CPR, downward trend you can see. Wide CPR stays sideways. So this is how you can analyze based on narrow CPR and wide CPR, right? Next, let us understand virgin CPR. Virgin central pivot range. See, if the price levels for a particular time frame do not touch the CPR level of the same time frame, then that CPR is known as virgin CPR. Let me put it in a simple manner. See, this is your chart, right? And this is your CPR. For a given day, if market moves like this, if it doesn't enter inside the CPR, then we can consider that as a virgin CPR. There is no, here you can see there is no candle which are entered inside the CPR, right? So this is known as virgin CPR. How to take trade? How this virgin CPR will help you to take trading decision? So let's understand with some chart examples. So on 24th November, you can see here there is a CPR, there is no candle inside the CPR. So then we can consider this as a virgin CPR. See, in order to consider that as a virgin CPR, you need to wait till 3:30. See, suppose you have waited till 3:25 and don't at 3:30 last candle, if it enters inside the CPR, then we cannot consider that as a virgin CPR. There should not be any candle inside the CPR. So, and 24th virgin CPR has been formed. So this will help you to take your next day's trade, right? So how to take trade? You need to mark virgin CPR like this, right? And this will work as a strong support and resistance for your next day trade. So for how many days you can mark virgin CPR? So till 5 to 6 days you can mark virgin CPR, but virgin CPR is more powerful when it is new. First day, second day, it is more powerful, and when day passes, it is not that much powerful, right? So see, and most of the time price respect virgin CPR. It will not cross the virgin CPR. So suppose here there is a support level. Suppose you have taken long trade here. You need to keep your stop loss below this virgin CPR, right? And you can book your profit once your target hit, right? So for see whatever strategy or indicator that we are following in trading, there is no such thing which will work 100% of the time, because trading itself is a probability. You need to always remind yourself trading is a probability. That's the reason. See, for each and every trade that you take, keep stop loss, right? Never trade without stop loss, and try to maintain at least 1:2 as your risk reward ratio, right? So if you can able to follow 1 is to 2, as you can follow 1 is to 3, 1 is to 4, whatever, but at least you should follow 1 is to 2 as your risk reward ratio. Why? Because whatever may be the strategy, even if you are following 50% win rate, 40% win rate strategy, you can stay profitable, provided if you are following 1 is to 2 as your risk reward ratio, right? So suppose you have taken long trade here, you just book your profit once your target hit, or here there is a important resistance level, right? So here you can book your profit, right? So these pivot levels will help you to work, as I already mentioned, these levels will work as a support and resistance. So this level, there is a level, so this will work as a resistance. Once it comes near the resistance, that is where you should square up, right? So let us understand this concept on a live chart. Yesterday, that is 6th December, there is a virgin CPR that you can see there is no candle inside the CPR. So what you should do, you just mark virgin CPR for today. Similarly, you can mark for tomorrow, like this you can mark, right? Okay, so here you, by market is looking bullish, and suppose you have taken long trade here, right? So where you should book your profit, you should book your profit once price comes near the virgin CPR, because virgin CPR work as a strong resistance here. So and definitely the price will take reverse, so that's the reason you should book your profit here, right? That is the beauty of virgin CPR. That is how you can take trade based on virgin CPR. Let's see some other. So here we cannot consider this as a virgin CPR because there is a candle. One single candle is there. Even there is one single candle which has entered inside the CPR, then we cannot consider that as a virgin CPR, right? And here there is a virgin CPR. There is no candle inside the CPR. So let me mark. So you just mark like this. First day, second day, up to 5 to 6 days you can mark, and you can take trade accordingly. And virgin CPR is powerful only when it is new, right? So up to 4 to 5 days I have marked, right? And one more thing, and virgin CPR is more powerful morning session instead of evening session. So there is a virgin CPR, but market never cross this, the today's CPR only, that is the current trading day CPR, right? So and it will never, this will work as a strong resistance. And here also, suppose you have taken long trade, so once it is coming near, and moreover here there is a resistance level, it has taken reverse, right? So here, so virgin CPR is becoming gold, right? Almost fourth day this is. So and moreover it is powerful only in the morning session. So suppose you have taken long trade here, so you just book your profit once price comes near the virgin CPR. And how many days we have marked? 1 2 3 4, and even fifth day also it works. So how you can take trade? So when there is a virgin CPR, right? So suppose you have taken short trade here, you just keep your stop loss above this virgin CPR. And moreover, this is the fifth or sixth day, so it is not that much powerful. So that is how you can take trade based on virgin CPR. So virgin CPR is powerful when it is new, and virgin CPR work as a strong support and resistance. Accordingly, you need to take, and virgin CPR works best at the morning session, market opening session, right? So this is all about virgin CPR. Now let me show you how to plot pivot points and CPR on your chart. So this is trading view charting platform. First let me remove this CPR and pivot points on my chart, then I will show you how to plot. Okay, so now you just go to indicator section and here type capital letter C, capital letter M and underscore, then pivot points. So after that select first one, that is CM pivot points MWD 4H 1H filtered. Select this one. Now let us do some settings. So go to settings here and in inputs we want only, see I personally use daily, weekly and monthly pivot. So you just mark daily pivots, weekly pivots and monthly pivots. Okay, then again go to settings and come to this second section, that is style. So here we don't want this hourly pivots, you just unmark these hourly pivots, right? And we don't want this 4 hours pivot also, because if you keep all these pivot you there will be more number of lines, you will get confused. So you just unmark. And daily pivot, I don't want this daily pivot average, but a daily pivot we need. So for this, for daily pivot I'm selecting pink color, it is already there, right? Make opacity 100% and thickness first one, right? And for daily R1 S1 R2 S2, select one single color for all these daily pivots, that is R1 S1 R2 S2. Here I am selecting orange color. So whatever color you want that you can select, but I am using these colors, but that color you should remember. So for second S1 also I'm selecting orange color, thickness first one, and do the same for R2 S2, orange, thickness first one, and for S2 make opacity 100% and select this one. So daily pivot is over. Next, weekly pivot. We don't want this weekly pivot average, you just unmark it. And for weekly pivot I am selecting blue color, dark blue for weekly pivot, make opacity 100%. And for weekly R1 S1 R2 S2 I am selecting light blue color, third one. Based on your convenience you can select your color. Do the same for remaining weekly pivots, right? Okay. And we don't want this monthly pivot average. For monthly pivot I am selecting red color, make opacity 100%, thickness first one. And for monthly R1 S1 R2 S2 I am selecting this light red color. Do the same for remaining monthly pivots. Okay, make opacity 100%, thickness first one. So we are done with monthly, daily and weekly pivots. We don't want this yearly pivots. You just unmark these pivots, right? And OK. So now we have plot pivot points on our chart. So now let us plot CPR, right? Again go to indicator section. Here type pivot range. Don't type CPR or central pivot range. You just type pivot range. Pivot range. Select this first one, pivot range pivot boss. That's it. So now we have plotted both CPR and pivot points on our chart. So This is how you can plot, and these CPR and pivot points work as a support and resistance, work as a boundary for your trade, right? So this is all about pivot points and CPR. Next indicator that we are going to discuss now is moving average. See, it is the easiest, simplest and most practical tool of technical analysis. Now let's see what is moving average and how we can use moving average to our advantage in the world of trading. First, let us understand what is an average. See, average is a number that is calculated by adding quantities together and then dividing the total by the number of quantities, right? That is what average is all about. Then, why it is called as moving average? Because the market is moving every single day and the averages keep moving. That's why it is called as moving average, right? So let's understand with an example. Suppose you are using 3-day moving average. So we will take closing price of every single day. Let's say it is just an example. First day closing price 1, second day closing price 2, and third day closing price 3. Then the moving average will be total of these 3 divided by number of days, that is 3. 6 divided by 3. So the 3-day moving average is 2, right? Okay. And since it is moving average, every single day added, then the moving average will get changed, correct? No? So next day what happened? This get cancelled and 2, 3 plus next day moving average closing price. So then it will be, the moving average will be 9 divided by 3. So it is 3. So the 3-day moving average is increasing. So it was 2 and 3. So that is how moving average is calculated. There are various types of moving average in trading, but most popularly used categories are simple moving average and exponential moving average. The simple moving average is nothing but what we have discussed right now. It is the average of the closing price of whatever day that we have taken divided by the number of days. Whereas exponential moving average, here the more weightage is given to the latest price. That is what exponential moving average. So now let's see the meaning of moving average. Moving average is an indicator that shows the average value of stocks price over a period and usually plotted along with the closing price. We will take closing price of every day and whatever time frame that we are using divided by the number of days, right? That is how we calculate a simple moving average, and the exponential moving average, more weightage is given to the latest price. And see, moving average are usually calculated to identify the trend of the market, and it will also help you to determine the support and resistance levels of a stock, right? So first let us understand how we can able to identify the trend direction with the help of moving average. See, as we all know, there are 3 types of trend: uptrend, sideways trend and downtrend, right? So uptrend usually indicates upward movement of a stock. Usually stock is making higher highs and higher lows. Based on that, it will give you a buy signal, whereas downtrend, that will give you sell signal. If it is a sideways, hold, right? Sideways means hold, uptrend means buy, downtrend means sell, right? So that is how we can take trade based on direction or trend of the market. So how this moving average will help you to identify the trend? See, if this simple moving average is positively sloping, then it is an uptrend. If it is positively sloping, then it is an uptrend. If it is negatively sloping, then it is a downtrend. Or in a simple manner, I can say, if the price is below the simple moving average, then it is a downtrend. If price is above the simple moving average, then it is a uptrend. Let's see uh, in a chart. See here, this line is a simple moving average. Price is below the simple moving average, so it is a downtrend. So what it will indicate? It indicates, it gives a sell signal. And when prices are above the simple moving average, it indicates an uptrend. So what it will indicate? It will give buy signal. When prices are above the simple moving average, it will give you a long trading opportunity. When you see when prices are below the simple moving average, it will give you shorting opportunity, right? Okay. And this is how you can take trade based on trend direction. You can also identify trend based on this simple moving average. And see, this moving average will also help you to determine support and resistance level. So we have already discussed about support and resistance. See, support means buying buyers and resistance means sellers, correct? No. So the support and resistance are some certain price levels which will not let the prices to go beyond such level. So based on that, you can take direction. When price is near the support level, it is an indication of buy, that is bullishness. And when prices are near the resistance level, it is an indication of sell. So here this is your 50 period simple moving average, right? So it work as a support. You can see a price took support from this simple moving average many times, right? So it is an indication of, it will give you buy signal. And here you can see price took resistance many times from this simple moving average. So it will give you sell signal. So this is how simple moving average also work as a support and resistance level, right? So how to take trade when it has taken support at this level? So it is a buy signal. At resistance it is a sell signal. That is how you can take trade based on moving average. So, and one more important thing, crossover strategies. See, crossover strategies are nothing but when short period are more sensitive moving average cross over the long period moving average, then it is considered as a golden cross. It is bullish. See, there are various combinations of moving average that you can use, and it is purely depends upon what kind of trading that you are taking, right? Suppose you are a long term trader, then you can use long term moving average. Let's say 50 to 100 or 100 to 200 moving average you can use. Suppose if you are a scalper, so every minute to minute information you need in that situation, you use 3 days to 13 days or 5 days to 13 days moving average. That is how, see, the combination is purely depends upon the kind of trading that you are doing, right? So, and here let us take as an example 20-day moving average and 100-day moving average. So this is short period moving average and this is long period moving average. Short period moving average, which is also known as fast moving average or more sensitive moving average, whereas long period moving average, which is also known as less sensitive moving average or a slow moving average, right? When short period moving average crosses, this is short period moving average and this is long period moving average. So when short period moving average crosses over the long period moving average, then it will create a long opportunity, that is buying opportunity. It indicates a bullishness in the stock price, right? So, and vice versa, when short period moving average crosses below the long period moving average, then it is considered as a death cross. So it indicates bearishness in the market. So that will help you to take trade, right? It will give you a signals, buy or sell signals. So let us understand these concept on a chart, live chart. So first let me plot a moving average. Go to indicator section and type here moving average. Let me plot two moving average, one short period and long period. Go to this settings and make it 20. I will use 20 and 50. Let it be more visible. Okay. And the second one, will make it red color and 100 moving average. Okay. So Here we are using two moving averages. The blue colored one is the short period moving average, that is 20-day moving average, and red color one is long period moving average, that is 100-day moving average. See here, short period moving average crosses over the long period moving average, so it indicates bullishness in the market. You can see market is going up like anything, price increases like anything once the short period moving, this blue colored is short period moving average, 20-day moving average, red one is long period moving average. Once this 20-day moving average crosses over the red one, so it will give you buy signal. See, market goes up like anything. And again, see, when short period moving average crosses below the long period moving average, see, this is long period moving average and the blue colored one is short period moving average. See, the short period moving average crosses below the long period moving average, so it is a death cross that indicates bearishness in the, see, it indicating a downtrend, right? Stock is making lower lows and lower highs, so it indicates downtrend, so it will give you sell signal. So it is clear, for a trader you can take trading decision based on this, right? Again, when prices, see, when price is above the moving average it is an uptrend, when price is below the moving average it is a downtrend. So like that also you can able to assess. See, whenever cross over and cross below has happened, see, that will give you signals, buy or sell signal. That is how you can use moving average, right? So this is all about moving average. Now let us discuss another important and popular technical indicator, that is relative strength index. See, this relative strength index is like a speedometer because it measures the speed of the market. That is, it will tell you whether the market is going fast, slow or medium. RSI is a popular momentum oscillator that is developed in 1978. What is this oscillator? Oscillator is a line graph that moves between two extremes. See, RSI is also a line graph which moves in between these two extremes, right? So let's say this is 70 and this is 30. So RSI is a line graph which moves between these two extremes, 70 reference level and 30 reference level. So it will give you a buy or sell signal because it will show you whether it will tells you whether the market is in a bullish movement or bearish movement. Based on that, a trader can take buy or sell decision. In the coming slides I will explain you how to read this RSI indicator and how we can able to get buy or sell signal from this relative strength index indicator, right? So it looks like this. See, this is your RSI indicator. So this is 70 reference level and this is 30 reference level, and RSI moves between these two reference level. Okay, let me show you how to plot RSI indicator on your chart. So first let me remove this indicator. Go to this indicator section and type relative strength index here. So we have plotted, this is your relative strength index indicator. So it moves between these two extremes. This is your 70 reference level and 30 reference level. So it is how it will give you signals, buy or sell signal. See, when RSI surpasses the horizontal 30 reference level, it is a bullish sign. See, when it passes above this level, so it is a bullish sign. Obviously it's a buy signal, it will give you buy signal. The market, the prices are going to increase, so it is a buy signal. And similarly, when it slides below the horizontal reference level, this is 70 reference level, if it passes below this level it is a sell signal, right? And see here, this is 70 reference level and RSI coming below this level, so it is an indication that sell signal, the prices are coming down, right? And similarly, here you can see this is RSI crossing this 30 reference level, right? So here it is a buy signal. Here you can see the stock price has increased like anything. So that is how you can use RSI to take buy or sell decision. And also see, RSI values of 70 or above indicate stock is becoming overbought. When the RSI graph shows which is above the 70 reference level, it is an indication of overbought. The stock has been overvalued, then obviously it has to come down. Its value has to be decreased, right? And similarly, if it is the RSI is reading of 30 or below, indicates oversold. Stock has been undervalued, and obviously it has to increase. Price has to increase, right? Okay. So let's see. So this is, here you can see the RSI below, RSI line graph is below 30 reference level. So it indicates that over sold, right? It has to increase. Undervalued, price has been undervalued, the stock has been undervalued, it has to increase. So when it goes above this level, then it is a buy signal. Here you can buy. See here, the stock price has been increased, is going up, right? And similarly, here you can see it is crossing this 70 reference level. So here this will give you sell signal. If you sell here, right, till here you can hold. This is where when it comes near this level you can book your profit. So that is how it will give you signal. These are the two extreme. Based on this you can take decision, buy or sell decision. Again, here it is a overbought zone. When the RSI coming below this 70 reference level, here you can sell, right? And you can book your profit once it is crossing above this 30 reference level, right? So that is how you can take buy or sell decision with respect to relative strength index. Next and final indicator that we are going to discuss in this course is moving average convergence divergence, which is popularly known as MACD or MACD. This technical indicator is a tool that is used to identify moving average that are indicating a new trend, whether it's a bullish or bearish. Because as we all know, the basic objective of technical analysis is to identify the trend of the market. And as a trader, we are supposed to take trade based on the trend of the market, right? When there is an uptrend, we are supposed to take a long trade, and when there is a downtrend, we are supposed to take a short trade, right? So, and this particular indicator will help you to identify the trend, new trend of the market. Accordingly we can take trade, right? So let's see how to plot this particular indicator on our chart. So for that, you just go to indicator section, and in the search box type MACD, MACD, and select first one. We have plotted MACD indicator on our chart, and there are three important components in this indicator. Before that, let me do some settings. Let me increase thickness of this MACD line and signal line. Okay, so here we have 12 period exponential moving average and 26 period exponential moving average, and signal smoothing, that is 9 period exponential moving average, right? So as I already mentioned, there are three important component in MACD, that is MACD indicator. So the blue line here you can see now, this is the MACD line, right? This is the first component of indicator, MACD indicator. So MACD line, and this is calculated. Suppose you are using default setting for this indicator, then this line will be calculated by subtracting a 26 period exponential moving average from the 12 period exponential moving average. And the second component is signal line. It is orange in color, right? And which is calculated by taking 9 period exponential moving average of the MACD line itself, right? So to put it in most simple manner, so it's taking an average of last 9 values of MACD line, right? And this orange, that is signal line, orange color line is known as signal line, and this is slow moving average, and the blue, that is MACD line, is a fast moving average line, right? And the third important component of MACD indicator is histogram. So these are the red and green bars that you can see in the middle of the indicator, right? The purpose of the histogram is to plot the difference between blue MACD line and the orange signal line. And here you can see when these two lines are far from each other, then you can see a big bars, right? Here there is a huge gap between these two lines, and you can see big bars. And when there is a very small gap between these two lines, then a small bars that you can see, right? So this is it. So these are the three important components of MACD indicator, that is MACD line, signal line, and histogram. And the MACD line is a fast moving average, and this orange line, that is signal line, is a slow moving average. Okay, so now let's see how to trade using this particular, that is MACD indicator. So here we have crossover strategies. So the MACD line and signal line. MACD line is the fast moving average, and signal line is the slow moving average. When fast moving average crosses over the slow moving average, then it is an indication of new trend. So here you can see the MACD line crosses over the signal line and trend. There is an uptrend has been started, right? And here the MACD line, that is fast moving average line, crosses below the slow moving average line, right? That is signal line. You can see a new trend has been formed, that is downtrend. You can see downtrend, back to back red candle, right? So it is an indication when the MACD line crosses over the signal line, then it is a like a bullish signal. So it is like you will get lots of long trade opportunity, right? When MACD line crosses below the signal line, it will create shorting opportunity, right? So that is how MACD, that is MACD indicator, will give you buy or sell signal, right? Here also see the MACD line crosses below the signal line, so there is a downtrend, back to back red candle. So that is how you can take signal from this thing, and here you take short trade and book your profit once you are targeted. This is how you can take trade based on by taking signals from MACD indicator.